$5 billion is the amount of money that the United States populace is losing from halted student loan payments. Back in March of 2020, there was a halt on all student payments. When we say a halt on all student loan payments, we're talking about the federal system, which accounts for around 93% of all student loans. Earlier today, we reached a tentative agreement with Joe Biden and the House saying that they will increase the debt ceiling and we're not going to have any issues until 2025. Of course, that is right after the elections, which both parties really want. That is irrelevant and neither here or there. As part of the agreement, they will stop the halt on student loan payments, and this goes into effect in 60 days. Seeing as how I am planning to buy shares of SoFi this week, and student loans or student loan refinancing is a major part of SoFi's business model that has absolutely taken a dump and down over 50% from where it should be, I thought, wow, this might actually benefit SoFi. The only thing is, SoFi does privatized student loan refinancing, and the halt was actually on public student loans. So I said, well, how does this help SoFi if there was never a halt on SoFi's business? And then I was on Twitter and I was thinking about it and doing research, and I came across a tweet from Data-Driven Investing. You guys should definitely follow this guy. I don't think he has a YouTube channel. I couldn't find one. He does have a Substack. He is extremely bullish on SoFi, and he has a wealth of knowledge. And me and him were going back and forth. We were talking, and I said, hey, how does this actually help SoFi? Because SoFi does privatized loans, not public loans. And the answer is, now that the halt stopped, people are going to be looking to refinance some of those loans, and SoFi is going to benefit extremely. The reason why I use the word extremely is, once I got that piece of information, I did more research, as I usually do for my videos, which I'm going to show you in just a moment, and the numbers are actually staggering of how much loan possibilities can be coming to SoFi. So let me give you some numbers. Shout out to Data-Driven Investing. So most federal loans are between 10 and 20 years with, for the most part, 10-year range, okay? The magic number is 10 years. And on average, they're under $25,000 loans. This is very important because SoFi does liquidity split super fast loans for smaller amounts. Now, $25,000 and less is considered a smaller amount. That's why I'm saying that a lot of business can be driven to SoFi. Remember, they want to help you refinance your student loans today so that in the future, when you need a personal loan, home equity line of credit, or a mortgage, maybe a business loan, so on and so forth, you will be coming back to SoFi. And this is the magic sauce of SoFi, how they can double up, triple up, quadruple up, so on and so forth, and maybe even pay us a beautiful dividend in the future. 92.7% of all student loans are federal. The average interest rate is 5.8%. 4.9% is the average interest rate for undergraduate. 6.54% is the average interest rate for graduates. And 7.54% is the average interest rates for parents of the graduate and professionals program. So you see, there are a lot of possibilities here, not only the average, but specifically in the graduate and parent graduate category. Average for SoFi is 5.74% or 4.57% if it's a variable rate. So as you can see, SoFi's average rate is far below the graduate and definitely even more so for the parent graduate rate. SoFi has an exceptional opportunity right now to gain a lot of business. So one might ask, hey, Adam, that's all fine and dandy, but are student loans really that much of SoFi's business? Are they really part of SoFi's business? And is SoFi actually going to make money or grow as part of this business? Because remember, SoFi just had a fabulous quarter, beating expectations and raising guidance for the entire year. And to this, I'm going to say, instead of me telling you, why don't I do a show and tell? come join me at my desk and I'm going to show you some very interesting numbers. You should definitely be following this if you are a SoFi investor thinking about getting into SoFi. Maybe you're thinking about exiting SoFi, because this really is super important if you are a SoFi investor. This is the financials from SoFi. I want you guys to pay attention to this line right here. It says student loan originations. In quarter one of 2021, it was at $1 billion. Then it went down to 859 million, 967 million. Then it went up to around 1.46 billion. All of a sudden, it went down to 983 million, 400 million, 457 million, 405 million. And in this last quarter, we had 525 million. Now, these numbers are fantastic, and you could start understanding what I was trying to explain to you, but let's go a little bit deeper into their financials, shall we? This is from their last earnings. I want you guys to read over here. First quarter student loan volume of over 525 million. It was down more than 50% from the average pre-pandemic volume, as the moratorium on federal student loan payments continues to weigh on the business. So besides for me connecting all the dots that are out there, it's starting to make sense. Now, I am new to SoFi, so I don't presume to be an expert, and I'm definitely not a financial advisor. None of this is financial advice. I'm not qualified, nor do I give financial advice. I'm just talking out loud. These are my personal investments, and definitely do your own research and your own due diligence. However, it doesn't take a rocket science. It doesn't take a rocket scientist. It does not take a genius, and it doesn't take somebody that's been in SoFi for the last year to understand the connection of SoFi's business model and student loans. As I spoke to data-driven investing, did my own research, it all just makes sense to me. Now imagine if SoFi can increase their refinancing to pre-pandemic levels, which is going to bring them up, instead of 500 million to $1 billion. This is going to get them to GAAP profitability all that faster. However, it's not just about the GAAP profitability, it's about increasing your reach and your total addressable market. As I said before, it's all about getting a customer now when they're young, in college, graduating college, and being there for them, being their partners in life when they need to get a home, when they need to refinance a home, get a car, pay for certain bills, whatever, start a business, so on and so forth. So it's very important that people have to be accountable and actually pay their debt. It was a stupid rule that was taking too long to decimate, and I'm happy that that's finally going to be over. So then you're going to say, well, Adam, how much student loan is out there that SoFi can actually possibly get? Let's take a look, shall we? This is from the St. Louis Fed. This is for the last 10 years because most of these loans are for 10 years. This is back from 2013. The student loans was, and this is all in millions, $1 trillion 10 years ago. $1 trillion is now $1.8 trillion. The fact of the matter is simple. SoFi is absolutely smashing earnings at the top end and the bottom end. And they are doing that in lieu of not being able to refinance as many loans as they can. And they literally said we are refinancing less than 50% of the loans for pre-pandemic levels. Well, what exactly changed? This stupid ass moratorium that's been lasting for way too freaking long. I've personally been hit with this moratorium in the real estate sector, but that's a whole different YouTube channel and a whole different YouTube topic. Speaking of which, if you guys like real estate, I do have a real estate channel down below. I own several properties in Section 8, and I go through all of my daily nightmares being a landlord, mostly in New York in the Westchester County. Guys, SoFi has a huge opportunity in the future. Their gap went from negative 14 cents per share to negative 5 cents per share. And they did this again with a major sector that they weren't able to address. And it's not about today, it's about the future. A year ago, they were negative 110 million, and now they're negative around 34 million. If they were able to do more student loans, they will be negative that much less, and they will be gap profitable that much faster. And all in all, and I think we as a community, dare I say I'm part of the community or soon will be part of the community, want gap profitability because we want another Palantir moment. And I think a lot of people from the Palantir community are in the SoFi community and vice versa. So that's pretty freaking cool. Guys, thank you so much. And if you guys want to be a channel member and buy me a cup of coffee, it's $3 a month. I have a link down below. I also have a Twitter page, which I'm going to leave the handle down below as well. Before you go, let me know down below if you think that this student loan forgiveness bullshit that's now going to be gone in the next 60 days is really going to help SoFi. I think we're going to see a huge difference in Q4 of this year and Q1 of 2024. Everybody have a fantastic weekend.